evening. Hello to everybody. Thank you so much for joining us this evening. My name is Mbali Nwoko and welcome to the Private Property Farming Podcast. Today is a very interesting topic as we are joined by a banker. And I know a lot of farmers watching the show always mention that, financial institutions don't support farmers, because the industry is deemed or viewed as very risky. The banks always get the bad end of the stick when it comes to supporting agribusinesses, whether you own a farm or an agro-processing company, or just supporting entrepreneurs in general, finance, funding, coming up with good banking solutions or financial solutions to start or grow your agribusiness. And so if you have been thinking about any financial questions that you want to ask our guest today, I definitely think you should take the advantage in tonight's podcast to ask our guest, because he's the head of an agribusiness bank. And so all the questions that may come through today will be best answered by someone quite senior and very, very knowledgeable. So I definitely think you'll benefit from tonight's show. And before I just also introduce our guest, I want to say that we still have the Sherlock Holmes competition running. We are in our 10th week. So all the information is on our website. And so be sure to visit our website as well as follow our social media channels to get more information on our Sherlock Holmes competition. And every week we announce a winner who guessed the riddle quite successfully. So be sure to participate in this competition, as there are prizes that we give away on a weekly basis. So just to remind you again, today we're talking about how financial institutions can support agribusinesses. And because we have someone from a banking institution, specifically Absa, we are joined by Abrie Rautenbach, and he's the head of agribusiness in the bank. Abrie, how are you doing? And thanks so much for joining us this evening.
Thank you, Mbali. Thank you for the invitation, and it's nice to be with you tonight.
Awesome. Thank you. You are the head of agribusiness within Absa Bank. That sounds like a very, very big title with a huge responsibility. What does your role entail?
Thank you, Mbali. So I think, the first point is that Absa has got a dedicated focus on agribusiness. So that means that we structure and we put, teams together that can specifically look at servicing, clients in this sector. So my role entails, designing or working on a strategy for the bank around, what we need to do. And then also, being involved with the execution of that strategy. So it's literally just telling the bank, where we should be focusing on, what is the priorities, and then making sure that we can deliver to clients. Clients are the most important part of our business. So it's just making sure that we do have the necessary products and solutions and what we call value propositions to look at specific clients.
And what enforces those strategies? Do you look at the economic climate within South Africa, within the globe, specifically in agribusiness? Do you look at what's happening in terms of employment, what's happening in our communities? What informs for you to come up with different strategies?
Yeah, so I think you've alluded to quite a number of them. So I think, the first starting point would always be the market. Clients need to be able to sell their product. So we take a view on specific commodities. Within my team, we've got an information desk that's manned by two economists, agricultural economists. So we look at trends, we look at, specific commodities, what is the outlook for those commodities. And then I think, that being a social corporate citizen is also important. So it's important to monitor and see what's the priorities from government. In the specific Absa, not only operating in South Africa, we've also in a number of jurisdictions outside of South Africa. So it's important to understand what are the priorities for those sectors. Stuff like, food security is fairly important, and then also, we are a regulated industry, so we need to comply with a set of rules as provided by the central bank, and we need to make sure that we look after, the shareholders' money. So there's a responsibility also to be responsible in our doings.
Yeah. And tell me, Abrie, what's the benefits of having an agribusiness account versus a normal business account?
So, Mbali, one of the things is that we actually do take a bit of a forward view when we look at or evaluate agribusinesses. So we take what we call cash flow lending. So there's definitely a view that 1 hectare of maize in a specific area, there's an average yield, there's an average price, and therefore there's a specific repayment ability on that specific hectare. So we do take a forward position. The other benefit in terms of products from an agri perspective is the ability to structure, according to seasonality. So if you buy if you're a salary earner and you buy a property, residential property, you pay on a monthly basis. If you're a farmer or a producer, your income is not going to come every month. It was probably going to be in 4 to 6 months tranches. So it's the ability then to structure these repayments, to fit that profile. It's also the ability, if you talk about, commodities like long-term or tree crops, it's the ability to understand that for something like macadamia nuts, for the first 8 years, it will not be in full production. So you need to be able to structure these loans with, moratoriums, capital moratoriums, to make sure that, you link your repayment with the seasonality of that specific commodity.
Okay. I'm glad you mentioned loans and how you structure them. Talking on loans, or still on the topic of loans, what process does the bank take in viewing a financial application? So a farmer wants to invest in macadamia nut farm. You mentioned the number of years that it takes before a farmer starts selling. Let's say they're asking for about 5 million. And once the farmer has submitted his or her application, what process actually happens behind the scenes that determines, from a bank's perspective, whether or not you're going to support this business financially?
So in Bali, I think the first step is to, when you decide that you've got a proposition for the bank, is to find, and I've alluded to it earlier, the dedicated focus around agri. So we've got dedicated agri bankers, in the provinces, in the towns, so it's very important that you get to the right person. You should not go to the home loan consultant or the vehicle and asset finance consultant, to finance, a farming business. So you need to make sure that you get to the agri banker, in that specific branch or that town. And if there's not a specific one in that town, they need to refer you to the closest guy that you can reach out, whether it's by email or by telephone. Once again, having this dedicated focus, these bankers are supported with what we call specialists. So every region got an agri specialist, which is trained, agronomist and agri-economist, and they help with the viability studies of these specific projects. So it's very important that you get to the right place. When you get to the right place, there's unfortunately quite a number of documents that you need to provide. So you need to do some research around your specific venture that you would like to go in. So you need to make sure that you understand in that specific area, is it dry land, rain-fed, or is it, is it by irrigation or some other system? You need to understand the yields that you can achieve. So there's a number of assumptions that you need to take, and you need to make sure that those assumptions are conservative, that it's realistic and achievable for that specific area. Once you do, you've got that, you do not necessarily have to give a business plan to the bank, but you need to provide, some historical financial information. And unfortunately, that's the part where we are regulated by the central bank. So you need to provide, a view around who you are from a financial perspective, whether it's in your personal capacity or in a business capacity, if there's a history. And then, the cash flow projections going forward. And then you need to articulate what you're applying for. So you need to be able to say that I'm looking for working capital, or I would like to have a loan, to buy an asset, whether it's equipment or whether it's land. There's a difference in terms of how we structure for land versus equipment. And you need to then be able to articulate exactly what is the requirement. At that point, that banker would then put up an application. So we've got a set, layout that we use, and that would then be completed by the banker, and with the supporting documents, it would be sending that to our credit department, which then makes the ultimate decision. What we try nowadays is if we cannot do the request as it's presented to us, we try and come back to say this is what we can do. So we're trying to come back with an answer to say that this is what we can do and this is what we can't do.
And what does credit really look at? You mentioned all these steps and some of the factors in terms of if a farmer is applying for credit or loan, you look at their financial background on the personal capacity as well as the business capacity. But even on the business capacity, does credit look at the specific commodity? For example, if the farmer is looking for macadamia nut financing, does macadamia nuts have a higher ranking as opposed to, sheep farming, for example, because of the rand per hectare that macadamia nuts can have, or versus maybe a vegetable farmer applying for financing versus a super fruit farmer? Does credit look at the specific commodities to say, sure, based on the global trends, this commodity is thriving, so maybe we'd rather give more financing to commodities that are really thriving and obviously fetching higher prices in exports?
Yeah, so there's basically four things that our credit guys would look at. So the first and most important is the ability to repay loans. So that's where we look at the specific cash flow projections for the specific project, and they determine whether the surplus that's generated are enough then to repay the loans. I think the second component that I would look at is the industry, and that's exactly what you just articulated. Certain commodities have need more upfront money, but the repayment and the surplus that it's generating is bigger, when it starts repaying. But then there's also a big question around what is the common agricultural practice in that specific area, and that's one thing that we would also look at. So if all the neighbors are farming maize, and there's one farmer that's farming blueberries, then immediately our credit guys and actually the banker needs to pause and ask more questions. Why do we think that it's suitable to plant, blueberries in an area that's dominated by maize? So it's that component. So it's the repayment ability most important. Then it's the industry. Then the third thing that we look at is the ability of the operator or the client to farm. So it's not easy, like you would know yourself, you're a farmer, it's not easy and the lessons are quite expensive. So you need to have a track record at producing, and if you do not have a track record, you need to have access to somebody that can support you, whether it's a farm manager or whether it's a section manager or whether it's a consultant, but you need to prove to the bank that there's an ability to actually, use soil, put seed in and grow that effectively. Important in that step is succession planning. It's very important. So we would always go and say, but if the operator, especially, I think one of the learnings out of the COVID environment, is you need to make sure that there's a plan B. So if something goes wrong, who can take over, who can take the reins, who can make the decisions. In agriculture, unfortunately, you need to make very timeously your decisions, because if the pests are there, you need to spray, you need to make the decision and you need to spray. And then I think lastly, also important, is the security that would be on offer, whether it's land or whether it's some other security or whether it's unsecured. And quite often nowadays, there's a discussion around the level of security that the bank needs to hold, and there's other instruments that can mitigate the security risk. There's guarantee schemes. Government is talking about the blended finance schemes, which will reduce the reliability on the lending component. So all of those things need to be taken into consideration. But first and foremost, you need to prove that there's enough surplus to repay the loan. Now, once again, with long-term crops, you need to take a long-term view. Cash crops are very easy. I can now say, and you can lock in prices for July next year or this year. On the maize crop, you can lock that in. So it's given, what price you're going to get. But with long-term crops, it's very difficult to anticipate 5, 6, 7 years from now. There's consumer preferences. We've seen in some of these long-term commodities that there's a consistent change, in the consumer behavior. This year they want this, the next year they want something else, and it's very costly to replace these cultivars to suit or to get it right for them, the consumers, the end consumers.
Wow, Abrie, you touched on very critical points there, and I'm definitely learning something new, especially with the pricing. It's when you have to come to a bank rather and seek financial assistance. The crop does matter, and especially if it's a long-term crop, there's so many factors that could happen, like you said, consumer changes and preferences. And I can just imagine the last thing a farmer needs is to get a loan from the bank, and only to find that in 6 years, maybe macadamia nuts is not popular anymore, or the price has drastically dropped. But I believe we are having a fruitful discussion, and that I'm not the only one that's learning. We have a comment here from Martha. She says, I love the discussions about funding. It makes the difference to one's investment prospects. So it's good to know that we're all having quite an overview or an overall view of what the bank looks at, especially when it comes to agribusiness. So thank you for that. I just want to say to anybody watching, we are speaking to Abrie Rautenbach. He's the head of agribusiness at Absa. So if you have any financial questions or questions just to do with banks regarding your agribusiness, please do comment on this live tonight. Abrie, I want to talk about renting versus owning. We see a lot of businesses, like we typically read your Ubers, your Airbnbs, etc., being billion-dollar businesses, but they don't own any assets. In the agribusiness or farming space, to be specific, for farmers that are trying to take that approach versus renting or owning, what is the stance from a bank's perspective when it comes to renting or owning?
Yeah, thank you, Mbali. I think it's a very pertinent question, and I think for a bank, it's quite important to understand the balance sheet of our clients, and that refers to the structure. So, and we do acknowledge that not all clients have the ability to buy outright. Now, there's advantages and disadvantages to both of these. When you outright buy, let me take a step back. So quite interesting is when we talk to equity funds and equity funds investing into agriculture, it's quite interesting to get their view around a question like that. So what they would tell us is that they would originally thought that, they would be getting their profitability or their returns from profit, on a year-by-year basis as you grow and you sell the crop, which is not the case. I mean, you alluded to, the dry spells, in South Africa. And South Africa is by all definitions, very dry. I mean, our average rainfall yearly rainfall is around about 400 millimeters, whereas the global average is at 780, so nearly double ours. So you need to be cognizant of that fact, and that means that there's up and downs in these cycles, and you need to be prepared and need to be able to withstand, or to have a risk mitigant to make sure that you can withstand these cycles. So what they tell us is that they actually, because an equity fund invest for a well-defined period, so it's usually 5 years or 7 years, and then they would like to get their money plus a return back. That's what they do. So they say they thought originally it would be from dividends and the profits made, and then they realized that these cycles can be quite long, can be quite deep, and that they actually make their money from the increase in value of the asset. So they're already telling us that there's an advantage of owning an asset where there's appreciation of the value. When you rent, there's no appreciation of the asset. I think an advantage of owning versus renting is the fact that you can assume that you need to put the thing that's not visible to people owning or renting farms is the nutrient content in that soil. And quite often, you need to put more nutrients into that properties. When you lease a property as an owner, you're not necessarily going to put in all the nutrients that's necessary. So you're going to rent it, and you're going to need to put down quite a lot of nutrients to make sure that you can achieve your yields. So does it serve a purpose? Definitely, especially I think in livestock farming, the veld is the veld, and there's carrying capacities, in specific areas. So it does play a role. It also allows you, to get up on your feet. The one thing that I would not necessarily advise people to do is to plant long-term crops on rented land unless you've got a very long lease agreement, up front, because there's a upfront investment and you only get the returns at a later stage. Easier to plant on rented land is some of the field crops, maize, wheat, soya beans, sunflowers. Those are the cash crops that can quickly turn you positive, subject that there's enough nutrients in that field. So once again, if you would like to rent, it's worthwhile spending the money to ensure that the nutrients are there before you sign on the dotted line. To make sure you are able to achieve what you would like to achieve from a yield perspective.
So if you're renting, it's definitely looking at cash crops, something that's short term, so that you could realize your money much sooner. And you would discourage farmers from renting with a long-term crop. So crops that take 5, 6, 7 years until you start your first harvest. Unless, and then obviously things would change unless if you have a long-term agreement, correct? Like you mentioned.
That's correct. The other thing that you also can't do, or would most probably not do on leased land, is that you would not put infrastructure. So you would, because that would go to the owner and not to yourself. As soon as you invest in a shed or a building, that's linked to the land, and it belongs to the title deed holder.
Yeah, but I suppose infrastructure also could be two ways. Even if it's like something that can easily be demolished or removed or moved to a different site, then I suppose that could work instead of something more permanent and long term.
Yeah, so I think the moment that you put cement down on somewhere, that becomes part of the land. Anything that's fixed to the land. So with greenhouses, there's still a debate whether that's part of the fixed asset or whether it's a removable. And I think that's why you now see quite a number of greenhouses, not having concrete slabs in the inside, but they're having bags packed on the normal soil, to make it more removable. So there is a danger, and there is a need, to just check a legal opinion around if you invest in leased land, whether that's, part of your balance sheet or part of the owner's balance sheet.
Abrie, as you're talking about land, I remember that, with my own journey within farming and, speaking to my bank, and especially when it comes to having to value land, why do banks view or value agricultural land, or take the value of agricultural land just 50% than what it's typically worth?
So in Bali, there's actually a calculation behind that. So it's actually not the fact that banks are talking about 50 to 60% of market value as the amount that they would borrow you is based on a calculation that's done in the background. So one of the methods of valuating farmland is to do an income capitalization. So that means, and I don't want to get too technical because I don't know the level of the audience, and maybe you can help and I can get technical, but we would use, what they call a discounted cash flow model, to derive at what is the surplus available. So what we're saying is that a hectare of land in Bobsfontein, you can typically do that. That's the common agricultural practice, is either, greenhouses or vegetable farming under some form of irrigation. Therefore, the bank would then use that as an assumption and say that the surplus available to repay debt is an X amount, and they would then, discount that over a time period, and it's usually 20 years that they would discount, and that would give you a value. Now, that value usually translates to 50 or 60% of market value. It's just a rule of thumb. So banks are flexible around it, and you can discuss that with a bank. But it's just a rule of thumb that these calculations are actually coming at 50 to 60% of the market value of that. It also goes back to the point that if the security value or the loan amount was equal to the market value, it means that everybody could borrow 100%, to go farming, which is also not possible. It's other, because that means that everybody would be able to make money, come to the bank, borrow 100% of the money, and then be able to, to make a return on that money without putting anything in themselves. So it's different levels of valuation, but it's based, that 50 to 60% is actually based on a rule of thumb around an income capitalization calculation.
I see. Even if the farmer makes infrastructural development on the farm and, brings value, sorry, I was going to sneeze. And even if they bring value onto the land, it will still be, that rule of thumb would still be applied.
Yeah. So you must remember that there's productive infrastructure and unproductive infrastructure. A pack house that's packing something is productive. So it's adding value to the product. You take the product off the land, and at that point it would have a spot price. You would then take it into a pack shed where you might class it into or grade it, and you might pack it and clean it. So there's a value add to that. Therefore, the bank would then add that value. If it's non-income, infrastructure, it's very difficult to give the benefit of that infrastructure, and that's the point where you start talking about necessarily infrastructure versus unnecessary infrastructure. To give an example, a house on a farm is necessary infrastructure that the owner or the farmer need to have a place where he can reside. Whether that value of that is 100,000 or 100 million, that's the difference. If you build 100 million house or you have 100,000 rand house, you can still stay in both of them. And therefore you cannot add that value unless it's very close to the town where people can actually, use other income to pay for that farm. So it's all about the ability to generate a surplus on the soil, via planting of commodities or long-term crops, or raising animals and being able to sell it for a surplus, and using that surplus then to repay debt.
My final question for tonight, Abrie, is I want to know, between the climate change and global warming, what is the stance that banks take, specifically in this case, Absa? What is the stance that a bank takes in supporting its farmers? So, for example, farmers experience drought, excessive rain, disease on their crops, a virus, that maybe could affect it's their livestock, etc. So when all these catastrophes happen, what position does Absa take to support its farmers, maybe to get back up again, to get the business going, or maybe even just to grow the business amidst of all these catastrophes or potential threats that could take a farmer out of business?
Yeah. So in Bali, climate change is a very serious topic. And banks have been called, to the front to say, we need to be able to prove that we are applying a level of thinking around climate change and how we approach that. So as Absa, what we're doing at the moment is we're busy building scenarios with the CSIR in terms of climate change, what will happen. So we will take the Free State and we will say, over a period of time, given the historical trends, what is going to happen, into the future. And it's quite interesting. So we've already had some views around that. So you find that there's a shift in the Free State. So it's moving from the west, to the east. The east is becoming much more, favorable climate, that Bethlehem rates that area, than the west of the Free State. So one of the things that we are doing is we are designing products, climate smart products, that's helping our clients to put up netting, that's helping with moisture control and helping with disease. It's also increasing the yield. We are as part of the climate smart products, we financing moisture probes so that people can properly plan, what needs to be done. We are involved with, switching of irrigation equipment to more effective, drip or micro irrigation is a lot more effective than overhead irrigation. So we're helping with that. And then I think the one thing that differentiates agri financing from normal financing is we do understand these cycles, because we're specializing or got a specialist focused, on this. We do understand that, there's going to be drought. So in a 20-year period, you're definitely going to have 2 or 3 years of drought. You're going to have 2 wet years. And we try to manage clients through these cycles. In certain areas does pose higher risk, and those are typical areas where we're going to insist on some form of a crop insurance. And I know that, there's quite a bit of work, going on with crop insurance to make it more affordable, but we understand that it's quite expensive. It might also be that you just insure it for the input cost, and not for everything, just to make sure that farmers are not moving backwards on a year-on-year basis. And we just try and manage farmers through these cycles. So we've come through COVID, or just before COVID, we've had 2 or 3 years of severe droughts, in a number of areas. There's still in the Southern Cape, that Oudtshoorn, Klein Karoo area, still very much, drought stricken at the moment. So we're managing those clients through these, these cycles, So sometimes it's difficult, and sometimes we need to make difficult calls. But as far as possible, we try and manage, through these cycles.
Oh, it sounds like the bank is doing a lot. And this is the information that we hardly don't get to hear, as farmers or people in the agricultural sector, unless you're in the banking space, of course. But Abrie, I think for myself and the team at Private Property, and I also believe on behalf of the audience, thank you so much for your time this evening. And obviously for sharing insights in terms of how Absa Agribusiness works in supporting farmers and the agricultural landscape as a whole. Thank you for your insights and just information, really, most importantly around the financial aspect of it, because everybody wants money, especially in these tough economic climates. So thank you also for making us understand the credit application process, the different commodities that credit looks at, and the different avenues or the different lenses in which you diagnose a business and definitely say would like to assist or not. So yeah, thank you for your time, and I hope you could join us once again, maybe to discuss something different that the bank is doing. But I think today was quite informative.
Thank you, Mbali. Thank you for the invitation. And yeah, if you need me for a follow-up or to answer questions afterwards, I'm happy to do so.
Awesome. Thank you. If you just joined us, unfortunately, we've come to an end of our conversation or the podcast this evening. Joining us this evening was Abrie Rautenbach, who's the head of Agribusiness at Absa Bank. And we were talking about how financial institutions in this particular case, Absa can support agribusinesses. So whether you're a farmer or in agro-processing, this conversation, I believe, was for you. And what we discussed today was things like applications, asking the bank to loan you money. Abrie spoke about the different commodities that are in demand, and we also spoke about renting versus owning. How does the bank view if you're a farmer and want to rent infrastructure or rent land or own land or own equipment, the differences between that, and also gave us the advantages and disadvantages of planting specific crops on rented versus owned land. And then lastly, we touched on climate change and got to understand from Absa's point of view how the bank supports its farmers when it comes to climate change and global warming. But if you missed tonight's show, we will have this episode on our YouTube channel post this live. But thank you so much for joining us. Thank you, Martha, for commenting this evening. Your comment and feedback is always appreciated. Please continue to share and like this video once it's on our YouTube channel, and ask questions because we are available to answer them post this live. From me, thank you very much. Good night and God bless, and I will see you on Thursday.